if they were able to send 28 million ounces of gold since December of 2024, why all of a sudden are there delays of manpower and of trucks? It speaks more to me of a default than anything else. And we've talked at length about the massive amount of naked shorting in London, which amounts to 90% of all the trades are paper. And a lot of people say, no, none of that stuff is, it's taking advantage of arbitrage. It's bringing gold home because there are people afraid of war in Europe. It's the Trump tariffs.
Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pin comment. Stay ahead of the curve. Don't miss out.
Expecting the floor to drop out once it corrects like we saw a few days ago. And here we are right back pretty darn close to where we were before the correction. Today, gold is at, where are we at today? Let me just double check here. So we got gold up $22 right now to 29.20. Silver up just a little bit, just a tick or two at 31.82. Climbing back to where it was. The resilience is a very good word, but really what to me is very different. Again, as we've been talking about now for the better part of a month, is that traders on COMEX are no longer rolling over their contracts. Many of them aren't, and that's really the difference. That's what enables this rehypothecated system to continue, because we don't stand for delivery, so we just keep rolling it over. It's a cash settlement, it's a speculation, or it's a hedge, but standing for delivery was something that never happened, and we started talking about this in 2020. I guess I'd rather be 5 years early than 5 seconds late. And we were talking about how there was a slow bleed down of inventory and deliveries happening at an accelerated pace, which was really unusual at that point, like an outlier. Well, not so much anymore. In fact, contracts standing for delivery have led to an open interest surge of over 750%. Open interest meaning those that are standing for delivery. I guess to me, this raises the question, why are the traders in the nation states and the central banks suddenly standing for delivery? That should be something people are asking themselves. The folks that are standing for delivery are not something to be dismissed. These are very sophisticated traders. And at the same time, another strange occurrence is that the net long position on COMEX is rising rapidly, while the short position is at its lowest since 2020. So being naked short right now when everyone is standing for delivery is akin to a mud wall in a rainstorm. Stupid, to say the least. We talked a lot about the contracts that stood for delivery last month. 15,691 contracts stood for delivery, 78.5 million ounces, second highest in COMEX history. Another 4.6 million ounces of silver was taken for delivery on Friday, this last Friday, bringing the 20-day total to 41.2 million ounces. That's 4 times higher, at least, than any previous year in silver. COMEX delivered 50 million ounces of silver on the first day March deliveries. But where is the media talking about any of this? Do you hear them? I don't. You and I do, and folks on your channel do. This is monumental. This is the same kind of environment where, why didn't the media tell us gold was reclassified as tier 1? The important things they're not telling us. Since December 2024, over 600 tons or over 20 million ounces have been moved into the vaults in New York City. This is an anomaly for sure. I find it interesting. We've seen 28 million ounces shipped from London since mid-December, yet now they say it's a T+8 week exchange instead of T+1 day, as it's supposed to be. And the question would be,
in today's news recap, UBS predicts silver to surge to $38 as gold eyes $3,200 amid market optimism. UBS has raised its silver price forecast, projecting the precious metal to climb to $38 per ounce within the next 12 months. This bullish outlook is driven by expectations of continued momentum in the gold rally and a modest rebound in global industrial production, the Swiss bank stated in a note on Monday. At the same time, UBS reaffirmed its gold forecast, maintaining its projection for the metal to reach $3,000 per ounce by the end of the year. However, the bank also acknowledged the possibility of gold surging even higher under certain macroeconomic conditions. In a risk case scenario, gold could hit $3,100 to $3,200 per ounce, UBS analysts noted. The forecast comes as investors continue to flock to safe haven assets amid economic uncertainties and geopolitical tensions. Gold, which has long been a store of value in volatile times, has seen steady gains in recent months. Meanwhile, silver, often considered both a precious and industrial metal, stands to benefit from increased industrial activity and renewed demand in key sectors. UBS's bullish outlook on both metals suggests that precious metals investors could see substantial gains in 2025. With inflation concerns lingering and central banks continuing their gold purchases, analysts believe that the trend for higher prices remains intact. Market participants will be closely monitoring Federal Reserve policy moves, economic growth indicators, and global geopolitical developments for further cues.
You know, the spidey sense tells me it's something more. But it appears that the London market for the past 2 months has been tapped out of bars, and they're trying to scurry to get more to deliver, or they're pausing because they're afraid that that's what ultimately will happen, kind of like Nixon did when he closed the gold window, figuring they're going to take all the gold, and then what? One thing that I found very interesting is the trend of bullion banks versus non-bullion banks. So the bullion banks being JP and Citi and Bank of America and Goldman. These are the commercial banks that are the major traders in bullion. 17.5 million ounces of silver was transferred from bullion banks to non-bullion banks here just a few days ago, making it one of the largest transfers in COMEX history, but going to sovereign wealth funds, family offices. This could be a proxy for the PBOC. It could be a proxy for Saudi Arabia. We don't know who they are. A proxy for India, a proxy bank, or a proxy sovereign wealth fund, or a big family office that's set up here in North America and standing for delivery over the Globex. These are very unusual things, and people should be paying very close attention that these kind of players don't take 17.5 million ounces of silver just for the hell of it. This is way outside the norm. We've seen the same thing in gold with February contract. Same thing. Massive delivery from bullion banks to non-bullion banks. Well, who are they? They're the others. That group, the others we talked about. I'm not really sure who they are, but we know that they're not bullion banks, but they're wealthy and sophisticated as hell. And that lends to conspiracy. Who could it be? Big money, to say the least. I would argue that, some people would say it's Fed proxy bullion banks are probably the biggest buyers. So, even the banks on behalf of the Federal Reserve, and they say proxy so that they're set up in a different way. A family office, a sovereign wealth fund, as I mentioned, some sort of a fund, a hedge fund, doing it on behalf of the Fed, could they? Or maybe on behalf of other entities. China, CTA, commodity trading advisors, are following suit. This is continuing to happen. Now, let's talk about, at the same time, what's happening in the marketplace. Kind of caught my attention, and of course, I'll take any questions. These are just things that have caught my attention. The VIX on the stock exchange has moved up, surged above 20 for the 6th straight day. Since February 14th, the VIX is now up 45%. So you're seeing great volatility, not only in the crypto market, but also in the S&P. I find it interesting that hedge fund exposure to the Mag 7 is at a 22-month low. So all of these people that have been driven into the Trump trade, the risk-on trade, the AI trade, the hedge funds, again, the big money, it's at a 22-month low. We've talked about the insider selling, NVIDIA shares selling, Jamie Dimon selling, Bezos selling, Zuckerberg selling, 7-1 insider selling versus buying the hedge funds at a 2-year low. And yet all of this money that has ridden this up, what does that tell you for where it could